Booking Holdings is a company that provides travel and restaurant reservations online. It operates websites like Booking.com and Priceline.com, and investors are curious if this stock is a buy for 2026 and beyond. I'll answer that question in this video, looking at the company's revenue growth history and cash flow from operations. So the company has demonstrated excellent revenue growth over the previous decade, and you should be asking, what's this big drop off here between 2019 and 2020? And if it's not obvious, I will highlight the reason, and it's because of the pandemic. If you remember, folks were encouraged to social distance, and traveling and leaving your home and going to restaurants or going in planes and hotels was highly discouraged, and people were not very interested in engaging in those activities. So the company's revenue absolutely collapsed, and it was similar for nearly every travel company. Excluding that blip, it's demonstrated excellent revenue that increased from $10.7 billion in 2016, more than doubling to $26 billion in the most recent trailing 12-month period. That's good for a compounded annual growth rate of 11%, even including this huge decrease between 2019 and 2020. Now, when I evaluate the company's returns on invested capital, we see another excellent trend here of improvement from 15.1% in 2016, more than tripling to over 48% in the most recent trailing 12-month period. It's an asset-light business model. Websites are not very expensive to operate, doesn't have a very large physical presence, doesn't own or operate any of the restaurants or hotels on the platform. It just brings folks to its website and earns fees every time there's something booked or purchased on its platform. An attractive business model to be sure, and returns on invested capital above 47-48% are extremely attractive. Similar metrics are demonstrated when I evaluate the company's cash flow from operations to sales. Again, we see this big dip here because of the pandemic, but excluding that, the company has maintained its operating cash flow to sales ratios of above 30%. A little bit concerning is that the company's cash flow from operations to sales has been trending downward. Even if you exclude the blip from the pandemic, it's fallen from 37% in 2016 to 33% in the most recent trailing 12-month period. And the company is highly exposed to the policies at Google, placing advertisements and search results, and latest changes to that policy could impact marketing costs for Booking.com. Click the link below to watch the full video.